All right, for the YouTube, say what up, Tube.
What up, Tube?
I'm just like, I'm waving at nothing over
I know,
here.
yeah. Out of habit, force a habit.
There's a thing. Yeah, whatever. All right. And, of course, last but not least, for the show, 3, 2, and 1.
Welcome to another episode of
Business Bros!
Woo, what up, ladies and gentlemen? Hernan Cias here, host of the Business Bros podcast, along with my co-host,
The insurance bro, James Cias, and you can't see me. I feel a little bit like John Cena.
You can't see me.
Can't see me. All right, but hey, welcome back, everybody, to the 4th installment of our 5-part series with 2 of our favorite guests. As a recap, we've had some great topics from these guys already. Check out our previous episodes to learn about the 2-account reconciliation system, personal budgeting, how to present your business to Shark Tank, and now today, we're excited to bring to you something very relevant for everyone this time of year, IRS Secrets. So join us today as we build on what we've already learned and give a warm welcome back to the Invictus Advisors, Jeff Redondo and Vidal Espinosa.
Woo! All right, ladies and gents, look, before we get into these IRS secrets, I want to remind everybody we got 100 hoodies, blankets, sweaters that we're trying to collect. We're halfway there. We got some pickups scheduled, which we got to get on those pickup schedules. 619-884-0045 or james@csfirst.com so we can get those sweaters in ASAP. We got a couple days till the end of the month, so hit them up. James is also the insurance guy, so if you guys need help with your homeowners, auto, workers' comp, any of those insurance liabilities that are, pending, looming, things you need to get done really quick, 619-884-0045 or james@csfirst.com. And today we're doing a different show sponsor. We're going to be at an event next Tuesday. What's the event called?
Fuck up nights.
Woo! Exactly what it sounds like, ladies and gentlemen. Look, everybody messes up. We all make mistakes, right? And sometimes we make the mistake in business, and this is the opportunity for you guys to come hear professionals in the industry talk about the days that they messed up, things that they fucked up on, and how they learned from those mistakes.
And if you don't fuck up, you're not doing anything.
You should be okay with making mistakes. That's part of life. You make a decision, you move in a direction, and guess what? Sometimes that direction doesn't work out. You modify, you adapt, you change, and then you structure where you're going. You're still going in the same direction, but you're going to trip and fall. You just get back up and keep going.
But you need to learn from those fuck ups. If you
Absolutely.
don't learn from those messes, guess what? Life is going to teach you again, and it's going to teach you again, it's going to teach you again until you learn your lesson.
I 100% agree.
Otherwise, if you don't learn, if you don't understand the lesson that life itself is trying to teach you through those fuck ups, it's gonna repeat and repeat and repeat and repeat and repeat. And it's not insanity. It's you're not learning.
Well, I think not learning is insanity.
It is.
I mean, otherwise you're going at it over and over and over again, expecting a different result. Well, learn the lesson, make the change, adapt, keep going.
And our fuck up team, we already fucked it up.
Oh, yeah? All right. A little insider scoop? Tell me a little insider scoop. What happened?
You just learn. You bring on people that you think are going to do a job, and then they don't do a job, and then you bring on other people you think they're going to do a job, and they don't do the job. So then you have to end up, doing it yourself and
picking up the slack.
Yeah. And so we definitely have learned from that, from this. This will be our first one on Tuesday night, so we're really excited. Your awesome host here, Hernan's going to be one of our speakers. So
yeah.
You definitely need to come out, and Vidal will be another speaker, and then we have one other speaker. Yeah, from the Hispanic Chamber of E-Commerce, and he's made a lot of fuck-ups.
We all have.
Yeah.
We wouldn't be here if we had not fucked up humongously. I have a saying. If I'm going to do something, I'm going to either do it mostly close to excellent or as excellent as possible, or I'm going to really screw it up major.
Yeah.
Major screw up. But I'm not going to be in the middle. I'm not going to be a mediocre.
Yeah. You're all in. You burn the ships behind you and you go for it.
Hell yeah.
Yeah.
Either I do it right or I do it wrong. No half-asses. Half-asses. Yeah. I hate half-ass.
Why waste that time? I'm a big thing about once you decide to do something, commit, and the consistency is where that work ethic happens. Yeah. And you're gonna see it's like working out. It's like doing our podcast every day. Not all of them are flawless. Sometimes we have technical errors. Sometimes you're not starting at 4
Are you
o'clock
calling
on
me
the
out?
dot.
Are you like low-key calling me out right now?
Hey, life happens.
It happens.
Take action.
Yes.
Take the risk.
Yeah.
Whatever it is, take the plunge. Whatever it is just do it.
People always look at you when you've reached the top of the iceberg, right? When you've reached that success point, but they don't see all the stuff where you messed up on, or at least they don't remember. And that's just to let you guys know. That means you're messing up and nobody really cares, right? Nobody's paying attention to that part.
They think that because you reached the top, you have done it and everything is sweet and success. Hell no. Mm-mm. I have a TED Talk that I did a couple of years ago. And I actually say, you know what? You need to realize when you hit bottom. But neither your mom, your husband, your wife, your family is going to tell you, hey, you already hit rock bottom. So it's time for you to get the fuck off the floor and start climbing up the whatever it is so you can make it. It's on you to realize when you have hit rock bottom and when it's time to get up and shake it off and continue moving.
And on Tuesday, you'll hear the stories, about Hernan's story from what he, his biggest fuck up. You'll hear Vidal's story, his biggest fuck up. You hear Tyde's.
One of them.
Yeah,
one of them.
You'll hear Tyde's biggest fuck up. And those are the opportunities that you can actually take back to where your business is and about learn from them and how to not make those fuck ups.
Yes, absolutely.
That's the key. And
learn from us.
That's what this event is about. It's about, really helping people grow their own business and learning from the mistakes of others.
Yeah.
That's the key.
And the other thing, and it's key in my story, one of the biggest things that I faced during that fuck up was accountability. Like not pointing the finger, when something goes wrong, it's always somebody else's fault. And you're never going to learn from that kind of mentality. If it's always somebody else's fault, what did you learn from this lesson? Like nothing.
It's
right?
True. On my way from the office to today's podcast, I was on the phone with a friend of mine, and they were talking about somebody else. And I'm like, dude, they have not learned their lesson. They're still stuck in the past. Mm-hmm. Move on.
Well, honestly, it's a childish mentality. Like, I my kids are small, and when they get in trouble, it's like, well, he did this or well, she did that. It's always like that. At a certain point in your life, you reach a level of maturity where it's, what did I do? Right? It doesn't matter if you were in the car not moving and somebody backed up into you. Like, yes, that person backed up into you, but you were in that position. You were in that spot. Like, there's some sort of accountability that you need to take for yourself. Otherwise, how do you fix it? How do you go forward from
it? Own it. Whether it's a bad thing or a good thing, own it.
And that's what that's on. Sorry, I keep bringing it back to Tuesday.
It's okay.
These are all the things that they'll talk about on Tuesday.
Yes.
I'll talk about a fuck up that I did that it cost me close to $3 million. Of my own personal money.
Yeah, well, mine's not that big, but mine essentially is I ended up going bankrupt. Like, it was bad for me. That was the lowest of the lows for me ever when it comes to finance. Yeah. But it's the best lesson I ever had. It was the most incredible financial education I ever came across.
Most successful individuals will teach you through their fuck ups. Mm-hmm. Pretty much every single millionaire, billionaire that it's out there will teach you in their books or in their conferences about their fuck ups. And that's how you learn. It's actually people leave crumbs around it, so you learn from their mistakes, and hopefully you won't commit them.
Yeah.
Learn. The learning curve, it shortens.
So make sure you Sorry, I'm doing my...
Yeah, no, hit the promo. Yeah, absolutely.
Make sure you get your tickets for Tuesday night. You can either go to fuckupnights.com/San Diego, so you can get your tickets there, or you can visit the Business Bros Facebook page, and I think you guys have the link up there that you can actually go and buy your tickets there.
Go straight to, where is it going to be?
Korea, I think it's Korea. I don't know how to pronounce it.
Yeah, I don't know how to pronounce it. Korea
Brewing it's on the corner of Park and Madison and University Heights. So
it's a super cool brewery.
Yeah.
So definitely check it out Tuesday night, 6:30. So once again, you can get your tickets at the Business Bros Facebook page, or you
I'm
can
trying to find the.
fuckupnights.com/San Diego.
Oh, we'll have James drop it in the links right here in the show notes too.
Awesome.
So, all right. So let's get into the IRS. Speaking
There it
of
Oh, we'll tell you later.
yeah, speaking of things that get fucked up.
Interesting things.
Let's talk about the IRS here for example. We got some stuff going on. It's tax season right now. There's whirlwinds of misinformation going on, and people have ideas of deductibility, and the IRS says this, and what's the difference between the IRS and the franchise tax board? All kinds of different things. What do you got for us today?
We're gonna start with people. Please don't follow the opinions of your neighbor.
Every situation's different. Every situation's different.
Even if it seems identical, it's different.
Mm-hmm.
By 1 cent, by $1, by $1 million. It's
by a
different.
dependent, by an age of a dependent, all kinds of different things.
Don't seek opinions that suit you in your case. Don't. The internet, not everything on the internet, it's true.
Mm-hmm.
Please do not follow that. Go to an expert. Go to somebody that knows how to prepare your taxes. If they're doing the taxes out of a garage, don't do it. There's actually clinics where they do for free.
Mm-hmm.
If you are low income, just do it there. That's probably one of the best advices that I can give you. Not because you don't get a refund, it means that it's wrong. I had a case where somebody came into the office and say, hey, somebody says that I'm going to get $3,000 in a refund. If you can promise me or guarantee me a $4,000 or $5,000 in refund, I'll do the taxes with you. I said, go to the one who's guaranteeing you the $3,000 because I'm going to do it right.
Yes. And that's a huge difference, right?
Yes.
Like I always tell people, be wary of when you ask a generic question if they give you an exact answer, because your answer from every tax professional should always be it depends, right? It always depends. Like I can give you a general ballpark idea of what the rules say in this matter, but the answer that I'm going to give you is going to always depend on your particular situation. Right. I mean, I made $100,000. Really? Okay. Well, did you make that as a contractor? Did you make that as a W-2? Was it dividend income? Was it, there's all kinds of different ways that you can earn the same amount of money.
My neighbor told me that since I made $100,000 and I have 20 dependents, I'm going to get $100,000 back from the IRS. Well, no, it's not true.
Not true. So, that's one of those things. The way you earn income makes a big difference. Yes. And that's why, when you just come at somebody and they ask you for your advice, it depends is always my tax answer. It always comes down to, well, we need to really sit down and see what your situation is, because it's going to be different. It's going to be different for each one.
Don't try to do the taxes on your own, please, because also same, we are tax preparers. You are a tax preparer. We are tax preparers, and the tax code. And I'm going to start with some interesting facts from the IRS. Most people think that, or know, or heard that the tax code is like 3,000 million pages. Well, it's not true. That's a lie. The tax code, it's comprised of 7,000 pages, and most of it's all laws. So the tax code is not as big as we think. So
7,000 is still a lot of pages.
It is. It's mostly a lot of old laws volumes that do not apply anymore. Right. So don't try to understand the laws on your own. Most of the time, the IRS will follow court rulings from previous tax cases and things like that.
That's how I have precedence on whatever's happening.
And as tax preparers, we only prepare the taxes on the information we gather or get from the taxpayer. We calculate it and we prepare the forms so the IRS or the state of California, if you're in California, process your tax return. Now, it's on them to grant the refund or not. Because sometimes it's like, oh, you told me that I was going to get $3,500 in a refund. Yeah, but you owe the state $7,000 and they collect
unpaid parking tickets. Yeah. Or so child support.
It's not on us. It's not on us to get your refund. We just do the calculations based on the information we get from you guys.
Absolutely.
So like was it? I think it was last week's episode. You got to turn in last week because Hernan said you definitely shouldn't get one of those payday
loans, yeah.
off the tax refund, because stuff like that could happen.
Yeah,
you
absolutely.
could have some parking tickets
and then what you thought was going to be a refund and you took an advance loan on, all of a sudden is not a refund.
Yeah.
And you can't pay back that loan, and now you have a debt at a super high interest rate.
Yeah.
And you are aware of those parking tickets. You are fully aware.
Mm-hmm.
And the state of California will collect anyway, some way or the other.
Yeah.
Period.
Any way it possibly can.
Period. Yes, they'll take away your refund, 100% of the refund. They don't care.
Yeah, and that's what I give them. I give, there's things like injured spouse and other things that we can do to petition, right? And
Yeah,
this
but
is what
it's only after the fact.
It's
that
after
they
the fact,
Took
yeah.
the full refund.
Yeah,
away.
yeah. So in other words, for those of you who don't know, like let's say you were married to a spouse and this spouse had back child support from a previous marriage. Well, now you're in this marriage, you're filing a joint return. You have part of your refund that you're supposed to be entitled to. That spouse has part of the refund that they're entitled to, but you know that the IRS or the state is going to take that money. So we can petition the IRS. We can submit a form saying, Mr. and Mrs. IRS,
Yes. Uncle
please split this refund and give me my portion and take the spouse's portion. But it's not a guarantee.
Yeah.
I'm not submitting this form and it's going to happen. This is a petition. It's an option that the IRS has, but you're exactly right. The IRS or the state, the franchise tax board, is going to determine whether or not they're going to give you the money.
And guess what? The IRS is the only agency in the United States that can garnish 80% of your income.
And 8% is a lot.
And they really don't care if you go homeless.
No.
Period.
They're brutal.
But you know what? They will only do that
in extreme cases.
in extreme cases where you do not open the mail.
You've ignored them
You
for time.
ignore them.
Year after year.
Do you know what my experience with the IRS, and I do not work for the IRS.
Yeah, tax
Okay?
preparers do not work for the IRS.
I do not work for the IRS, but my experience with the IRS has been amazing. They're humans.
Mm-hmm.
They also commit errors, but they do listen and they understand every case situation, and they do case by case. Compared to the state of California, I'm sorry, but they are.
Yeah, I agree. I've had the same experience with the state. The state is tough.
They can care less about you are going to give birth or whatever. They don't care. They go based on what it's in front of their screen in their call center.
And that's it.
And that's it. They are not tax experts. They're in a call center, I don't know where, and they don't care. They don't care.
Yeah. I've had the same thing. And the other thing is what my experience has been with the IRS is they're delayed. Right. So you might think you get away with something if you're trying to be sneaky or trying to add special dependents or all kinds of different stuff to get, different types of credits. And you think you get away because the IRS sent you a check. Yeah. It's going to take them a year or two or sometimes 3. But when they catch up to you, that liability, that tax that you have to pay back, you shouldn't have received it in the first place. They're going to make you pay that back plus a penalty and interest since that April 15th deadline of that year.
Hey, good thing that you mentioned April 15th. People, listeners, April 15th, you are supposed to pay your taxes.
Yes.
The extension only grants you the extension of a period to file your tax return.
The
paperwork, okay? Only 6 months. Pay your taxes on April 15th. Do a quick calculation. Have your tax preparer do a quick calculation and send that tax payment.
And what if you don't know if you owe taxes or not?
Well, that's the whole point. Is you need to have an estimation.
Yeah.
You know where you're at. Here's the thing about people that have like a 1099 type income, right? Is you're earning income gradually throughout the year. Every time you get a check, part of that check needs to be set aside for taxes, and you can make estimated tax payments to the IRS every single quarter. So it's not like, most people, do they do that? No, they wait till the very end. And then they're like, well, I don't know how much I'm going to pay in taxes. If you've been doing your due diligence ahead of time and setting that money aside, you're issuing that payment ahead of time, you will not have a problem. Will you owe at the end? Possibly. Will you get a refund? Now at this point, it's possible that you can get one back. But you're still required to make your payments. Just because you don't get a W-2 and it's taken out of your paycheck, you're still responsible for that tax by April 15th. Right?
Right. 100%. Please send payment. And if you don't know if you owe taxes, the first thing is that if you had a tax liability on 2018, send for 2019 exactly the same amount of taxes you paid last year.
Yeah.
Period. Because that's your obligation.
And it's a good faith. Yeah, it's a good faith obligation.
Now, if you're a 1099, my recommendation is whatever the 1099 is, multiply it by 15% and send that.
At minimum. Yes.
At minimum. So at least if you owe taxes, the penalty is going to be smaller when you file your tax return after you file your extension to file the paperwork. It's not an extension to pay taxes. It's an extension to file your paperwork. A lot of people confuse that.
Okay, but I got another one for you because I get this one all the time. I heard that the filing deadline is March 15th, not April 15th.
March 15th is for corporations. Okay? Don't individuals, Schedule C, if you're a 1099, you will understand April 15th. If it's a Saturday, it moves to the next Monday. If Washington, D.C. has a holiday and it falls on the same day that the tax returns are due, it extends an extra day for the whole country. Federal purposes, not for the state of California. The state of California is different, but they are ruled under the same guidelines for paying the taxes, which means that you pay your taxes April 15th and you get an automatic extension granted for 6 more months.
Whew.
Oh,
You got some myths here too,
I have
right?
I have several myths here.
Okay, let's go.
fun.
Let's go into some of these funds because I know, ladies and gentlemen, I understand paying taxes sucks. I get that. I get that. So let's have some fun with some of these myths.
Hey, mi comadre me dijo. My neighbor said that filing taxes is voluntarily. If I want to file the taxes, I'll file them. If not, no. You know what? That language, it's on the IRS circular where it says that you are voluntarily to file your taxes. That doesn't mean that you might file taxes. No. The word voluntarily means that it's on you. It's your responsibility to inform the IRS of your income. Okay? All your income. The United States.
Worldwide.
That's what, yeah.
Worldwide income.
The United States taxes its residents and citizens on their worldwide income. Okay? Meaning that if you live abroad, for instance, if you live in Mexico, okay, you're still liable to file a tax return in the IRS, in the United States for all your income. Compared to Mexico, if you're a Mexican citizen, you are supposed to pay taxes only if you reside in Mexico for over 183 days. So if you only live in Mexico for 180 days, you're safe. You're not paying taxes in Mexico. You're paying taxes where you are the resident of.
Now, if I'm living in another country, I'm still required to file a U.S. return.
Exactly.
Right? But the U.S. is also going to give me credit for any foreign tax that I pay in another country.
For federal purposes, yes. If you're working, let's say that you work in Mexico but live in the U.S. Mm-hmm. There's a lot of people that do that as business owners, right? You get an income, you get a salary, or you get dividends, or whatever it is that you get from Mexico. For Mexico, you are going to have taxes withheld, okay? Those taxes, you can credit them in your tax return in the U.S. for federal purposes only, not for the state of California or any other state. Those you must pay, unfortunately.
Sucks, but it is what it is, right?
If you live in California and you enjoy Disneyland, then you have to pay taxes.
And you know, speaking of being abroad and stuff like that, this is where we get into that definition of tax evasion and tax avoidance, right?
Right.
Because there's a big difference, right? That tax evasion is illegal.
It is.
Right?
It is.
Tax avoidance, 100% legal.
It is.
And that's what we try to do as tax preparers, is try to avoid paying a large amount of taxes when we can find legal deductions, credits, and loopholes to get you a lower tax rate.
That's exactly what Amazon does, Facebook, Uber, those big companies. What they do is they avoid taxes by generating revenue abroad. Mm-hmm. Corporations are not supposed to pay taxes on their revenue generated abroad, only on the dividends that they receive and bring into the U.S. Okay? So that said, is Amazon or Facebook, sometimes you see on your credit card from Amsterdam. The payment went to Amsterdam. So they have their servers and their credit card processing in Amsterdam. So that revenue, it's not reported in the U.S. That's avoiding taxes. Evading taxes is telling Uncle Sam that you did not receive dividends in your U.S. account for dividends, interest, or other sources of revenue.
Or in simple terms is you work at a place and they pay you cash under the table.
Ooh, that's not good though.
But that's evasion, right?
That's evading
this is well, you can get paid cash under the table. That's not a problem. That's completely okay.
Mm-hmm.
It's when it comes time to file your tax return and you say, I didn't make any money this year. That is evasion.
And as a business owner, when you bring this back to a bigger context, as a business owner, you may not want to avoid all of your taxes because you may want to use some of that money to help your business grow or to do certain things in your business.
But mostly is because most lenders can care less about your financial statements. They're going to base your ability of repaying those loans based on your tax return, unfortunately. And if you say, well, but I make good money, yeah, but your financials on your tax return say that your revenue was $100,000, you're not subject to getting a loan.
Yeah, you don't qualify.
You don't. But you made $2 million. Well, you evaded taxes for $1,900,000. The IRS will catch up, really. If they have a little bit of suspicion, they'll start digging. And if they walk into your office or they go around your office and your Maserati is sitting outside and you own the building under a shelter corporation and things like that, they're going to subpoena you.
Yes.
If you fuck up with the IRS, they'll go after you. Okay? Be very clear, be transparent, have tax strategies. Tax strategies are not illegal.
No.
And as long as you use a tax code to strategize, they're not illegal.
Right.
Period. Strategize before paying taxes, not the day that you're going to pay the taxes.
This is a proactive strategy.
Be proactive in the U.S. U.S. is the biggest tax paradise in the world, the United States.
That's why we have 7,000 pages in the tax code, because each one of those laws is a loophole or a credit or some legal way to avoid paying a
United States is the biggest tax paradise in the world if you know how to use the tax code.
That's why there's so much, when you talk about being a preparer versus planning for your taxes, that's why there's a lot of times the preparers will just do the taxes and be like, oh, by the way, you owe $3,000.
Because it's a reactive approach. Yeah.
So unless you actually talk with somebody that knows how to help plan your taxes and help to figure out what your income is going to look like at the end of the year so that you're not having to just write a check when you sit down with your preparer, you want to talk to that individual.
Yes.
We help people like that. I know Hernan helps with people like that. So it's not just about preparing the taxes, it's about planning them out over the course of the year so you're not hit with this huge tax bill at the end of the year.
And I've had clients walk to me, go into our office and say, hey, my profit for this year is $5 million and I don't want to pay taxes. Can you help me? Well, I can help you, but your bill is going to be the amount my attorney is going to cost me, the amount of possible bail from federal prison, and the amount of the revenue that I'm going to lose
for going to jail
for doing something wrong for you, for my family. So if you're willing to pay all that, I might
consider
help you.
the option.
Yes, but no.
No, that's really what it comes down to is knowing when to ask for help. If you're asking me to prepare your return, it's already happened.
Yeah.
That year has closed. You cannot. Very, very few things that you can do in the new year before April 15th that will affect the prior year. And there's a minuscule amount of things that you can do.
I think that the only thing.
If I'm hearing you right, what you're saying is if you want to avoid paying taxes in 2021, start planning today in 2020.
Yeah.
Yes.
And you're paying taxes in 2021 for the tax year of 2020.
Yes.
Yeah. But you need to be proactive. You can do tax planning when you're doing your tax return, the day that you're doing your tax return. There's a lot of accountants out there that will prepare their client's tax return and say, hey, you owe $25,000 in taxes, by the way, this year. We'll sit down next year and review your tax strategy. They never do it. Run from them.
Yeah. Well, I mean, but it runs both ways, right? It goes both ways because you as a business owner should be thinking about your tax strategies throughout the year, right?
It's on you.
Every single quarter, you're reviewing your P&L. Every month, you should be reviewing your P&Ls. But when you're reviewing your P&Ls, you should be noticing, are we making a lot of money this month? We're making a lot of money this month. Okay, what do we need to do? Do we need to spend some money, reinvest, go back into our company? What are we going to do with this types of funds? If that's the approach, or are you trying to maybe, like you said, you're going to buy a major building or something. Now you're looking at, okay, well, we're going to have slush funds. What are we going to do? The point is, it doesn't. If you wait until January to meet with your tax preparer for the previous year, you're toast.
Be proactive.
There's nothing you can do.
And again, if you're a business owner, don't assume that everything that comes out of your checkbook, it's an expense deductible for tax purposes. It's not. If you buy a car and you pay it in full, guess what? If you pay $25,000 for that car, you cannot deduct $25,000 out of your tax return that year. Period.
Correct me
In your mind, you're thinking that, I already generated a $25,000 expense for the business. Well, yeah, over 5 years, period.
Correct me if I'm wrong too. With the changes in the tax code, with the Trump changes in the tax code, a lot of the deductions aren't the amount that you're getting as an individual usually outweighs all the little minor deductions.
Yeah,
that
so
you're taking
the
out.
standard deduction, it's changed. The same thing with the exemption. So it used to be that each individual person on your return helped your return. So people were throwing on tíos, cousins, dogs, and everything on the return because it would help. Now it doesn't affect you like that. It doesn't matter how many people you have in your return; it's not going to affect you. The other thing is, people used to itemize when they would have their mortgage deductions, their tax, state tax. Now you're capped. It's like $10,000 for your state and local income tax with your property taxes, and then your mortgage interest. And oftentimes, what you're talking about is once you add all these things up, the standard deduction is going to be more than the itemized. So you're taking advantage of the one that's bigger, and it's the one that the government's giving you.
There's strategies.
And that's only
For
absolutely
all
true.
that, there's strategies.
Yeah.
But the lady who's preparing the tax returns out of her garage, it's not going to know the strategy to maximize your mortgage interest and your property taxes. Period. That's it.
we always encourage to talk to someone versus just doing it from a computer or it's like, we could just go down to Office Depot and buy a box and put that button.
I mean, you can write your own
If
return.
it's a simple tax
and if
return.
it's a simple tax return, I got students 17 years old, maybe one or two W-2s. By all means, and I tell them in class, I'm like, don't pay anybody to do your tax return. We're gonna do it here in class, and we're gonna get it done. And it's gonna be a learning experience for you, right? Because at least you can walk through, you understand. We're gonna explain it.
Like if you're a business owner,
don't do it on there.
And there's another myth here that says that students don't pay taxes. Everybody pays taxes if it's over a certain amount.
Right.
This year is $12,200 or something like that.
And I try to keep it simple. I'm like, look, did you make 10 grand? Yes. Okay. Then we need to have a discussion. Did you make 10 grand? No. Okay. Well, it's going to be a little bit easier for you, right? Are you required to? Probably not. But let's file. Let's get that withholding, that federal withholding back.
Let's see the W-2, and if they withheld personal taxes, which is the federal income tax, then prepare the tax return to get the refund.
Yeah. So case in point, I prepared my first return today for one of my students. Came in with one W-2. It was like less than $8,000. And we had a good discussion about the allowances because when we finished, right? I mean, I saw it right away, but when we finished, it was going to be a $15 refund, right? And I mean, it's not worth you're paying anybody to do it, right? We got it done, but it allowed us to have this conversation about, look at these allowances. What do they mean when you fill out a W-4? How do they affect your tax return? And right now, when you're young, it means nothing. It's not a big deal. But when you get a little bit older, now all of a sudden we're like, okay, well, how are these things going to affect you?
It's funny because even when I was young, when I was younger, I would use the withholdings as a savings account.
Yeah.
You know what I mean?
Don't do that.
I know, but
it's funny because
that.
It's funny because he gets the same response that I get, and I advise that for certain people. And it's funny because you're like, how the hell are you gonna?
You're financing the government for free.
Exactly the argument that I always get. I completely understand that.
Financing Uncle Sam for free.
I 100% know that, but there are people who have horrible savings capabilities.
And there's so many people out there. Let's bring this really down.
Yes.
To practical usage, right? Most people don't care if you're financing the.
That's what they don't realize.
If you're financing the government for free, what they care about is that at the end of the year they can buy after they get their tax refund, that they can buy their new TV.
Their new
Or
TV,
they
their
can
new
buy
car,
their
they
new
can go to
car, they can
Disneyland
buy
or pay
their
their
Disneyland.
Disneyland passes, guys.
Right. Whatever that is. And for them, in their mind, that's a lot easier than having to like, oh, wait, I have to save $25 for my new fridge or $50 for my...
If you give them the cash, they won't do it.
but-
And that's the
right.
biggest deal.
You know-
That's the biggest deal. And and it's funny because every time I share that strategy, because I do that with my parents, right? My parents, they get extra withholdings, and we do it on purpose because they're not great savers otherwise.
Right.
But every time I share that strategy, all my tax preparer family, anybody who's in that space, I get hosed because of that exact thing.
No, that's
You're
it.
giving them an interest-free loan.
No,
I
and
go, I
that's-
understand that.
But I did that, and I'll be completely transparent with that. You know, it's like I'm not a good saver.
Yeah.
But you
I mean,
did
now
that.
I've
And
learned.
there's the other opposite side of the coin where it says that some people go exempt 99 dependents to get no tax withholding for federal and state purposes, and then at the end of the year when they prepare the tax return, it's like, why do I owe $5,000? Well,
Right.
you have no money taken out.
Yeah,
Right, and
yeah.
that's for me is you have to, but that's all planning.
Yes.
You know,
And that's all strategy
that's
and planning
and strategy and like I knew what I was doing on that W-4.
yes.
You know, I knew that I wanted to use it as a savings account,
Yes.
and so for me it was easier than trying to save. Oh, let me save my $25 every
Yeah.
month to buy my new TV at the end of the year.
Exactly.
You know what I mean?
No, I 100% agree. And it's funny because without it, I would get hosed when I would do that strategy. And my argument to them was always the same thing. You understand the value of having that interest-free loan given to the government, right? What you can do with that time, with that money owed, right? There's a big difference. And we completely understand. But the customer, the end consumer, doesn't. Right. And
Right.
because they don't understand that, when I'm sitting down with them, I'm looking at what is it that you want to achieve. If you want to achieve that TV or buy a new car or whatever it is at the end of the year, then let me force you to do it without, literally forcing you to do it.
Right.
We're going to fill out one form and now it's done. And I know at the end of the year, I can project your refund's going to be $8,000, $9,000, $10,000, whatever it's going to be. And you've achieved this goal. And now I look like a superhero
Right.
because I helped them get that thing that they wanted to get to.
Especially with W-2 employees, because then you can actually do like, oh, I want to save for my IRA, and it pulls it right out of your check. I want to save for my, my 401k, or I want to save for this. So many employers have those options, and you don't even see it. So
And
you
if they don't have
ultimately,
that
that's
option,
Out of sight, out of mind.
Yeah.
just your bank has that option. Your
Yeah.
bank,
Yeah.
as soon as the check or the direct deposit hits your account, the
Automatic.
bank takes it out.
Yeah, that's how I have my personal one
That's,
set
that's
up.
the
Yeah.
easiest way to start a savings habit.
And it's like you said, and you can look at it the other way too. There are people who are like, I'm never going to give Uncle Sam any of my money. And they put their exemptions high and they do all that stuff. And you know what? They put that money away themselves. They put it to work.
And
It
that's
earns
cool.
interest, and that's great. And they wait till April 15th at 11:59 to electronically make that payment. But they do it. Right. And that's a
Right.
different type of mentality. And that's okay too. That's a
It is.
different kind of strategy.
and that's all planning.
Exactly.
You got to figure out the best way. Like for me, it was having them take it out, at the front end, because
Yeah.
I know I'm not a good saver. I mean, now I am, but back when I was in college and when I was like, working my first job and, all this, I knew I wanted that new car, or I knew that wanted that new TV or whatever it was.
Yeah.
So for me, it was easier just to be like, okay, just take more out, so I know I'm getting a refund at the end of the year.
And I love the W-4 strategy. I've used it before to help people get out of debt. Like
Oh,
I'm like,
yeah.
look, you need to pay these credit card bills. Let's line up all your debts. Let's laser focus. We need to find an extra $100, $200. Guess what? It's in your refund. It's there already. Let's adjust your W-4. Let's find that money to come in your paycheck, and now we can allocate it to do
Yeah.
debt.
But you're one of the few good ones that helps taxpayers with their W-4. Not everybody updates their W-4 every year.
Yeah.
They based on whatever they want to do or accomplish for that year.
And that hurt a lot of people when the tax laws changed.
Oh yeah.
Yeah, but because the when the tax law changed, the purpose was to incentivize the economy by generating more cash in the economy.
Yes.
So people were supposed to take more in their paycheck than before.
Yes.
And more, I mean 10-15% more based on less withholdings. But you had to be proactive and change it.
Yes.
That's it.
But that's the thing is most people, you're right, they didn't. And then I remember, when that law changed, and I had to explain to people who were used to getting a refund every year, like, You didn't make the change.
But it changed a little based on the tax brackets, and they took a little bit home, meaning that instead of getting a check at the end of the year for $2,000, they spread that over the 12 months.
Yes.
And the thing is that they didn't realize that.
Right. Well, they did. See, when the tax laws changed and they saw a bigger paycheck, they were ecstatic and they were happy. But when they filed their return at the end of the year and their refund wasn't where it's supposed to be, they were pissed off, and that president screwed us.
Right.
But you know, it's just again, it's perspective, it's understanding, it's education, and knowing that you're still making the same amount of money, you're still paying the same amount of taxes. Actually, you paid less in income tax. If I showed them, you paid less in income tax. It's just you got your money throughout the year.
Yes, and you did not plan because you did not know.
Yeah, exactly.
Period.
Woo, we got another myth.
Another myth. Let's talk about cannabis.
Oh,
you know what? People think that illegal activities are not taxable.
Ask Al Capone.
Right. Al Capone was caught by tax evasion, not meaning that he wasn't paying the taxes.
Not for murder, not for bootlegging,
he was preparing taxes, but he did not report all of it. Now, illegal activities are taxable.
Absolutely.
Are taxable. And there's a special circular from the IRS. Circulars are, in addition to the tax code, it's probably the procedures that the IRS inform the taxpayers on how to pay their taxes.
It's like a manual.
Yes. And it's called a 260A circular, where it tells you to illegal activity individuals, drug dealers, cannabis, people that are doing illegal activities, how to pay their taxes. You're supposed to pay your taxes. So at least if you're caught for doing that stuff, you don't go to prison additionally for tax evasion.
Yeah.
So it's very interesting that there's a code. There's actually a circular based on cases where people have been defended and say, hey, yes, okay, I'll pay you taxes, but at least grant me some deductions. If you're telling me that my revenue, the income that I generated from selling drugs, it's taxable, allow me to deduct certain things. Obviously, you can't deduct your airplane or your car or your clothing as other companies, but those are legal businesses. But you can deduct the cost of acquiring the illegal products.
So in other words, your ordinary necessary expenses?
Not ordinary necessary expenses. Only the cost to acquire the product that you're selling.
Oh,
so
that's new to me.
Let's say
that's
that,
new to me. I didn't know that.
Let's say that you are in the cannabis industry, but you're not licensed. Or you don't have a license from the state.
You're doing it illegally.
You're doing it illegally. So, and you sell 100 little bags or whatever. Okay. So how much did it cost you to get those bags?
That's what I can deduct.
$10, and you're selling it for 20 or 30 or 40. I don't know.
Whatever the market
is. So the difference, that's your profit. That's what you're going to pay taxes on. But you cannot deduct, oh, do you know what? Let me deduct my mileage to go and drop them or go and make them. You can't. Let me deduct the meals that I had with the client.
All the Cheetos.
The munchies. You cannot deduct those. Okay? Only the cost of acquiring the product or the service that you're providing illegally. That's basically what the circular says. Now, people that have a legal license for the cannabis industry in the state of California, they must follow two rules. One for federal purposes, which is the 260A, and the other one is the state of California, which is, since it's a legal activity, you can actually deduct anything that is necessary and ordinary to do that activity.
So in the state that it's legal in, when you file the state return, their laws are a little bit different, so we can treat it like a legitimate business at that point. But the IRS does not recognize it because the federal government does not recognize it.
For that, there's a lot of strategies. If you own a license, you must have at least 4 or 5 corporations where you're going to be reducing your tax liability.
And if we have experience in the cannabis industry, because we've actually one of our fuck ups was getting into the cannabis industry. You know what I mean?
Yeah.
And so we realized it's not our industry. So we got out of it.
Learned pretty quick. Yeah.
And so that's one of the things we have knowledge of. We do have knowledge of the accounting for the cannabis industry, the tax laws, the tax implications. So if you're in the cannabis industry.
That's good to know because we do have clients in the cannabis industry.
Yeah.
So it'd be good to know. I'm sure they're always looking for people who have that knowledge space.
Yeah, I would strategize. You need to strategize in that industry.
Absolutely, especially it's cash heavy.
Yes. 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 Another myth?
One more myth. Let's do one more myth.
If I file my taxes late and I pay interest and late fees, the government or the tax agency will never audit me or look at me.
Yeah, I hear this all the time. It's okay. I'm not gonna get audited. I paid this year.
I paid late taxes. I paid late fees and interest.
So that they're good. They're happy.
They're good, yes, because I'm paying them more than what they were asking for. Come on.
It's not a tip. You're
no, no. Here, thank you.
Thank you.
No,
Hey,
it doesn't work
this
like
one's on
that.
me. This one's on me.
Yes, yes. It doesn't work like that. No. Pay the taxes on time. At least send 90, 80% or whatever it is. Sales tax. We had somebody that said that to us. Oh, my accountant told me that if I file late and pay them late fees and interest, they would never audit me.
So you're late on purpose, just because they want money. That's what they want. That's exactly the strategy.
And I ask, are you paying your accountant for that advice?
So how do we generate an audit? I mean, how's the audit usually like generated? I mean, I know there's no magic
There's
answer for that, but
no magic. Interesting fact: only 1.2% of individuals in 2018 were audited. So imagine how many tax returns they're filed.
yeah,
And to be in the 1.8% ratio, it's like you got very bad luck.
yeah,
But it's not bad luck. If your revenue it's $100,000, $80,000, and your expenses are $200,000, be congruent. Okay, the IRS is gonna know. Oh well, he made $80,000 but lost $200,000.
Wait a minute. You
How did you pay for your
you're saying
living?
yeah, you're saying you have to have a business that has the intent to make a profit? Is that what you're trying to say?
yeah. It's not a hobby.
Yeah.
It's an intent. Yeah, 3 years of losses for a business, the IRS will consider it as a hobby.
Yep.
And you're screwed because they're gonna go back. They're gonna audit you. So don't cause those problems on you. Don't generate fake businesses. Oh, you know what? I register for Amway or for this America or whatever those stuff.
Or whatever.
And I pay my dues and let me generate a loss. Okay, generate a loss the first year. Second year, did you do anything? No, but let me put it because I pay my dues, my fees. Third year is saying it's not a business. It's a hobby. It's an intention.
Mm-hmm.
Okay, don't write that off.
And even in he talks about we talk about tax avoidance. Everyone thinks, oh, I'll just open up a corporation in a different state, or I'll just do this, or I'll just do that. That stuff, there are ways with that, but in California, it's really, really difficult.
Yeah,
If you're
California's
gonna do
got their hooks in you.
Yeah, if you're going to do that and you're in California, don't do Delaware or Nevada because they cross-reference, they cross-information, and if you open a Nevada corporation, you're in California, do it at least right. Don't give your vendors your W-9 with your California address.
Yeah.
Please,
Oh,
please, or your Delaware address.
Oops.
At least if you're going to cheat, do it right.
Yeah.
Right?
I live in Mexico. What's your number? 619.
Yes. Oh, I have a Nevada corporation, but my address is in San Diego, California. Oh, come on. Please,
Man.
no.
All right, guys. I always have fun with taxes. I'm one of those weird people that finds it interesting, and I want to learn more stuff. Ladies and
But you
gents.
for international taxes.
Yeah. On the international side, that is not my cup of tea. I'm throwing it out there.
Those are fun.
Yeah, that's not that. I'm gonna send them over to you for that.
You
one.
win a quick fact about new tax laws in Mexico?
What?
Hey, listen. If you're an accountant in Mexico, which we are also, I have to inform the IRS in Mexico of any possible idea of me and my clients creating a tax strategy.
Oh, you have to disclose.
Yes. So if I have a meeting with you in my office in Mexico and we strategize for tax purposes, I am obligated to inform the IRS in Mexico about that possible, even though I do not implement it, that you and I had that conversation. Because if somebody else in that meeting calls the IRS in Mexico,
Your license is revoked.
forget about that. I get a penalty of a million pesos. First. Second, I can be thrown in prison immediately. All my assets will be seized and liquidated until I'm proven innocent.
Oh, by that time, you're already done.
Oh, wait, there's
It
more.
gets worse?
It gets worse. Once you're done and defended, and if you get out of prison, the government can tell you, well, Mr. Espinosa, your assets were 1 million pesos, okay, at the time of us liquidating it. But we believe, and it's our belief, that your assets were not worth 1 million pesos, even though we liquidated them at 1 million pesos. Here's 10 pesos for your assets. We're even.
Goodbye. Have
Bye-bye.
a nice life.
Yes.
So the point of the story is be happy you live in America. Uncle Sam is not so cruel.
It's not.
No.
It's not. Be proactive. Communicate. If you owe taxes, just call them and say, hey, you know what? I can't pay you. I offer them $10, $20. They'll work with you.
There's
They
offer and
really-
compromise.
Yeah,
there's
yeah.
payment
Really
plans.
work with
There's
you.
all kinds of
They will
different
Tons
things.
work with you.
we've helped tons of our clients. You know, we've helped.
I've saved one individual $1 million
See, it's
But you
huge.
gotta talk. You just gotta talk with them.
Yep.
for $1,000. They paid the IRS $1,000 for a tax liability of $1 million.
I'm telling you, ladies and gentlemen, if you know the rules to the game, you will have a better chance of winning. It's all about knowing the rules, and taxes is just one of the rules of the game.
And do your due diligence. Don't hire those companies that pay set pennies on the dollar. Oh, if you owe more $10,000.
Have a conversation. Find out. Invictus Advisors, their contact information, James is going to throw it on the screen. So make sure you guys hit them up.
Sorry, James.
The
we missed
Shark
you on
CFO.
the,
And if
on
it's
the
not
video
us,
today.
really, if it's not
It's all
us
good.
or Hernan, find somebody that is trustworthy.
Mm-hmm.
Please don't play with that.
Yeah, it's something you don't want to play with.
It's like if you're having a heart attack, you're not gonna perform open heart surgery on yourself.
No,
are you?
absolutely.
So just be
Do it the right way.
Yes.
All right, ladies and gents, reminder, we got 100 sweaters, 100 hoodies, 100 blankets, whatever we're looking for to get to 100. If you guys got anything, hit James up, 619-884-0045 or james@csfirst.com. He's also the insurance guy, so hit him up for all your insurance needs. And, of course, on Tuesday, we're going to be having our fuck-up nights, telling our stories about things that we messed up on. Come on out. Join us. It's fun. It's going to be a fun event. It's at a brewery. Grab a drink, listen to the stories, and learn something.
I'm proud of my fuck-ups.
That's right. We are. We
I
wear
own
we
them.
wear them on our sleeves, right? Well, James wears his heart on his sleeve. I got scars. I got scars that I can
That's
share
why
with
me
you.
and James are so much alike.
Yep. All right, ladies and gents, that's all we got for you guys today. Peace.
Bye.
Bye-bye.
And we're out. See, that's fun for me. I love talking to. I know a lot of people don't like the tax talk, but